Hello, I'm Chris Menard. In today's Excel video, we're going to look at 3 liquidity ratios using Microsoft's balance sheet. We're going to look at the current ratio, the quick ratio, and the cash ratio. There are other liquidity ratios, but these are 3 very popular ones. Let's go ahead and dive in right now. So in case you're wondering what in the world is a liquidity ratio, it simply tells you a company's ability to pay off its short-term obligations, usually due within the next year, with its current assets. Current assets are cash, short-term marketable securities, short-term investments, prepaid expenses, inventory, accounts receivable. It is items that you expect to either be cash or converted to cash within the next 1 year. That is a current asset. So I downloaded Microsoft's balance sheet except for the items that have the gray background. Everything else is exactly the way it was when I downloaded it. We're looking at June 30th of 2022. This is in millions, which means on this inventory, row 13 here, that is 3.7 billion. I'm just going to say the numbers as they are, as they look, just to keep this simple. So a couple items while I go through these 3 ratios, they will go down in numbers as I go through here, and they should, and you'll see why while I'm going through here. So the first one is current ratio. You take your current assets and you divide it by your current liabilities. Here are the current assets right there, 169,000. I'm just rounding here. Our total current liabilities is 95,000. Let's go ahead and do this formula. So it's going to be simply equals that number divided by the current liabilities, 1.78, right there. Now, I'm going to do this one more time. Here's a cool tip from me. All 3 of these ratios, we're going to divide by the total current liabilities. So instead of me having to keep coming down here and clicking on this 95,082, I'm going to use the name box and I'm going to actually call that total. I did do an underscore. Current liabilities, I'm abbreviating it. I'm going to press enter. So I named that 95,000 total current liabilities. So now, since all 3 of these are based on that, we got 169,000 divided by, I'm going to just start typing total, and there it is. And I got the exact same number. Let's make that stand out a little bit. How about bold? And there we go. Next one, by the way, the number 1 means if we had 1.0, we have enough total current assets to pay our current liabilities. So the higher the number, the better. So Microsoft honestly is looking really good here. The quick ratio is very similar to the current, except we're going to leave out inventory. So we will use cash, and we'll use those short-term investments, and we'll use accounts receivable, leaving out inventory. So here we go. This is going to be the sum of those 2 numbers. And there's actually 3 items. It's cash, short-term investments, which got totaled as 104, and then we're putting in the accounts receivable, and we're going to divide by, again, we're always going to divide by the total current liabilities. The reason you leave out inventories on the quick ratio is inventory may not be able to be turned over as quickly as we expect it to be. So let's see here, 1.57. And the third item is the cash ratio. This one says, okay, let's leave out the inventory. Let's also leave out the accounts receivable. A lot of accounts receivable is net 30, due within 30 days, but let's see what happens if people just don't pay us. So that one's going to be the cash and the marketable securities divided by total current liabilities. Microsoft's still looking good. So basically Microsoft, if they didn't turn over their inventory and get paid for it, if they didn't get any money for their accounts receivable, they can still pay all their short-term obligations that are due within the next year, because it's 1.1. There you go. I hope that helps. And again, there's more liquidity ratios than this. We did use only one financial statement, the balance sheet, and all three of these were based on the total current liabilities. So let me know if you like this video. Feel free to subscribe, ring the bell. Have a great day. Thank you.